Hello and welcome. Today, let's dive into a topic that affects almost every real estate investor at some point: the fear of missing out, also known as FOMO. It's that powerful feeling that can sometimes push us to make decisions we're not fully ready for. Imagine you're seeing home prices surge in your area. Suddenly, everyone's talking about buying, calling it a once-in-a-lifetime opportunity. You start feeling the pressure, wondering, if I don't buy now, will I ever be able to afford it? That's FOMO at work. So, what exactly is FOMO in real estate? In simple terms, it's the fear that if you don't act on a deal right now, you'll miss out. But here's the reality. Just because everyone else is jumping in doesn't mean it's the right time or the right property for you. FOMO often clouds our judgment, pushing us into deals that aren't ideal. Let's break down a few ways FOMO can lead to risky decisions in real estate. Overpaying. When prices are rising quickly, FOMO can drive people to overpay just to secure a property. They think, if I don't act now, it'll be even more expensive next month. But if you overpay, you're starting your investment at a disadvantage. If the market slows down or prices stabilize, that urgent deal could leave you with losses instead of gains. Rushing into contracts. FOMO often makes people rush into contracts without thorough research. You might skip inspections, ignore the property's downsides, or rush through financing details. Every detail you skip now could cost you later, in repairs, fines, or unexpected fees. A smart investor takes time to inspect, research, and calculate before committing. Ignoring red flags. FOMO can make us see only what we want to see. Imagine you find a property in a hot area, but in your rush to buy, you overlook warning signs, like structural issues or zoning changes that could affect its value. In real estate, those risks are rarely worth ignoring. So, how can you avoid falling into the FOMO trap? First, set clear investment goals. Know what kind of property you're looking for, your budget, and your ideal return. When you have clear goals, it's easier to ignore the hype around deals that don't align with your criteria. Second, ask yourself, is this really the only opportunity I'll ever have? Real estate isn't going anywhere. Opportunities will come up in every market cycle. It's better to miss a deal that feels risky than to rush into one that could cost you later. Finally, always do due diligence. Even if it seems like everyone else is moving quickly, don't let that push you to speed up. Slow down, research the area, inspect the property, and ask yourself if it aligns with your goals and budget. A good decision is always worth the wait. In real estate, it's easy to let FOMO influence our choices, but successful investors stay focused on their own goals and plans. Remember, it's about quality investments, not chasing every hot opportunity out there. Take your time, stay grounded, and make choices based on what's truly right for you. Today, we're diving deeper into a common pitfall in real estate: overpaying because of FOMO or the fear of missing out. It's something even experienced investors can fall into, especially when the market's hot and everyone's talking about rising prices. Imagine this. You're seeing properties sell fast in your area, and everyone's buzzing about how prices will only keep going up. That urgency can make you feel like you have to act now or risk missing out forever. But here's the thing. FOMO can actually cost you more than you might realize. When we're in a rush, we're likely to ignore important factors, like whether the property is actually worth the price we're paying. Overpaying due to FOMO means you're already starting your investment at a disadvantage. If the market cools down or prices stabilize, that urgent deal might turn out to be more of a setback than a smart investment. So, how can you avoid overpaying due to FOMO? Here are a few key tips. 1. Know the property's true value. Before making any offer, research the property's actual market value, based on comparable sales in the area. Don't just rely on list prices, as these can sometimes reflect seller optimism rather than true market demand. 2. Evaluate the neighborhood carefully. Check if the neighborhood is truly growing, or if it's simply riding a wave of hype. Look at things like future development plans, school quality, and community amenities to ensure that the area supports long-term value. 3. Consider your own financial goals. Ask yourself if the property fits into your investment goals and budget, or if you're just feeling the pressure to buy. Knowing your limits helps you stay disciplined, even when it feels like you might be missing out. 4. Take a step back. Remember that there will always be more deals. Real estate is a long game, and missing out on one property won't stop you from finding another. By following these steps, you're setting yourself up for success. FOMO is strong, but as a smart investor, you'll want to make decisions based on value and strategy, not fear. So, next time you feel that pressure to buy now, take a breath, look at the big picture, and ask yourself, is this deal truly right for me? Again, today, we're tackling a big question for real estate investors. How do you know if a deal is truly right for you? With the constant buzz around hot deals, it's easy to feel pressured by FOMO, fear of missing out. But in real estate, the best investors are the ones who stay selective, knowing that not every opportunity is worth pursuing. When FOMO kicks in, we often feel like we need to jump into every deal to keep up. But successful investors are thoughtful. They actually say no to most opportunities, only committing to those that genuinely fit their goals. So, how do you make sure a deal is the right fit? Here are a few essential steps. First, get clear on your goals and budget. Are you aiming for long-term appreciation, monthly cash flow, or a mix of both? Are you comfortable with fixer-uppers, or do you prefer turnkey properties? Defining your criteria helps you filter out deals that don't match your strategy, so you're not swayed by every hot opportunity that comes up. Ask yourself, am I interested in this deal because it aligns with my criteria, or am I feeling pressure to keep up with what others are doing? Real estate investing isn't a race, and a good deal for one person may not be right for another. Take a step back and make sure you're focused on your own objectives, not just on following the crowd. Once you've identified a potential match, dig into the details. Look at the property's location. Is it in a neighborhood with growth potential, or is it already at peak value? Consider the condition of the property, estimated repair costs, and how long it might take to see a return. By carefully analyzing these factors, you're making sure the deal stands on its own, not just on the hype. It's easy to feel like if you pass on this deal, there won't be another. But real estate is a long game, and new opportunities arise all the time. Having patience gives you the power to pass on deals that don't fully align, trusting that a better fit will come along. By asking these questions and following these steps, you're setting yourself up to make wise investment choices that align with your personal strategy. Don't let FOMO rush you into a deal that doesn't feel right. Remember, the most successful investors stay focused on quality investments, not just quantity. So, next time you're tempted by a hot property, take a step back, trust your criteria, and only move forward if it truly meets your goals. That's the smart way to invest in real estate. Back. Today, let's explore a critical concept in real estate investing: timing the market versus time in the market. There's a lot of talk about finding the perfect time to buy, and that can lead to a lot of FOMO, the fear of missing out, especially in a hot market. But here's the truth: chasing perfect timing is often riskier than focusing on long-term investment. When you're focused on timing the market, you're constantly trying to predict highs and lows, jumping in when prices seem low and selling when they're high. But as many experienced investors know, predicting the market is incredibly hard, even for the pros. Instead, many successful investors focus on time in the market, investing with a long-term view and letting the value build over time. In real estate, long-term holds can be powerful. Property values often appreciate, and rental income can grow year after year. This approach helps you ride out market ups and downs without the stress of guessing when to buy or sell. Let's look at why time in the market often beats trying to time the market. Market cycles. Real estate markets go through cycles. Prices rise and fall, but over the long term, values tend to increase. By staying invested, you benefit from this overall growth without having to time each market shift perfectly. Rental income. When you hold a property for years, you also build income through rent. Over time, rents generally increase, adding more and more value to your investment. Less stress, more stability. Constantly buying and selling can be stressful and costly. Long-term investing brings more predictability and peace of mind as your assets grow steadily over time. So next time you feel the pressure to time the market perfectly, remember that time in the market usually wins out. Real estate rewards patience, and by staying focused on the long game, you're setting yourself up for steady, reliable growth. In real estate, patience and consistency go a long way. Stay invested. Keep your eye on the long-term picture and let time work in your favor.
Welcome back. Today, we're talking about a powerful force in real estate marketing, FOMO. The fear of missing out is often used to make buyers feel like they need to act fast. But smart investors know how to spot these tactics and make decisions based on value, not pressure. You've probably seen phrases like limited time offer, prices going up soon, or hot property alert. These are classic FOMO triggers designed to push you into a quick decision. But here's the thing. While some opportunities might be genuinely time-sensitive, FOMO-based marketing often exaggerates urgency, sometimes overlooking key details you'll want to consider before investing. Here's how you can avoid falling for FOMO-based marketing. Look beyond the hype. If you see phrases like once-in-a-lifetime deal, dig deeper. Ask yourself, what makes this property unique? Sometimes, a closer look reveals that the property doesn't live up to the excitement in the ad. Research independently. Don't rely solely on the marketing pitch. Research the property, neighborhood, and market trends yourself to get a true picture of value. Set your own pace. Remember, in real estate, moving fast doesn't always mean moving smart. Take the time you need to evaluate each deal, regardless of marketing pressure. Stick to your criteria. If the deal doesn't align with your goals or budget, it's okay to walk away. There will always be other opportunities, and saying no now could lead you to a better fit later. Staying aware of FOMO tactics helps you make decisions based on facts, not fear. Real estate is a long-term game, and patience will always serve you better than panic. So, next time you see a must act now ad, take a breath, think it through, and remember, there's always another deal waiting. Oh, and welcome back. Today, let's talk about a skill that every successful real estate investor has mastered: patience. In a world that constantly pushes for fast results, it can feel counterintuitive to wait. But in real estate, patience can be one of your most powerful strategies. Think about it. Many investors jump into deals quickly, driven by FOMO, the fear of missing out. But experienced investors know that some of the best opportunities take time to reveal themselves. By waiting, you're often rewarded with better choices, less competition, and deals that are a stronger fit for your goals. Let's look at how patience pays off in real estate. Better deals. When you're not in a rush, you have the freedom to compare multiple properties and pick the one that truly meets your criteria. Waiting can lead you to the right deal, rather than settling for what's immediately available. Market cycles. Real estate markets go through ups and downs. When you're patient, you can take advantage of favorable market cycles, buying when prices are lower and demand is less intense. Timing a down cycle can mean a huge win for your portfolio. Due diligence. Patience gives you time to do thorough research, reviewing a property's condition, evaluating the neighborhood, and forecasting potential returns. Rushing these steps can lead to costly surprises down the road. Remember, in real estate, patience often leads to smarter, safer investments. If a deal feels rushed or pressured, that's a red flag. The most successful investors play the long game, knowing that quality deals are worth the wait. So next time you feel the pressure to act fast, take a breath. Real estate rewards those who are willing to wait for the right opportunity, and by staying patient, you'll find deals that truly align with your goals.
For joining us for this series on mastering real estate without falling for FOMO, the fear of missing out. We hope these videos have given you the tools to make smarter, more confident decisions in your real estate journey, ones that aren't driven by pressure, but by purpose and strategy. Remember, successful investing isn't about chasing every opportunity. It's about choosing the right ones that fit your personal goals. Real estate is a long-term game, and with patience, solid research, and a focus on your own criteria, you're already on the path to building a successful portfolio. If you found this series valuable, be sure to hit subscribe and stay connected with us. We're here to bring you more insights on real estate trends, tips, and strategies that empower you as an investor. From market updates to deep dives on specific investment strategies, we'll keep you informed and ready for each step of your journey. And remember, real estate isn't about following the crowd. It's about creating a path that's right for you. So stay tuned, keep learning, and let's build a future of smart, well-informed investment decisions together. Thanks for watching, and here's to your success in real estate.